Hello everyone. In this video I'm going to go over a trading approach that was taught to me years ago. I did not come up with this. I call it the pivot break approach. I'm not sure if it's the official name for it. It's been around since forever, but it is very helpful in identifying possible areas of support where you want to get long or areas of resistance where you might want to consider taking a short trade. So at first, don't look at this with a critical eye, just understand the basics. I'm going to start with a 10-minute chart simply because sometimes things are easier to see on a slightly higher time frame, but of course then I will come down to a 1-minute chart and explain exactly how to use this pivot break approach most effectively. Before I start, if you don't mind, I have 979 subscribers as of right now to my channel. Wouldn't it be great to hit 1,000? If you are not a subscriber, please consider subscribing. Please leave me a like. It just helps with the YouTube algorithm. And well, let's get to this. Some of the rules that I'm going to mention are somewhat flexible and could be adjusted by a trader. I don't even remember at this point, since it's been years, exactly how it was taught to me. I just know that I have a particular way of trading this approach, which I will go over, but just understand some things you could change to best suit your trading style. Okay, let's start. So of course, markets move in waves, right? They reach an area of support, they bounce up, they go up, they reach an area of resistance, and then they come down to a new area of support. So of course, that's how it works. Now, how do we know, or how can we confirm, let's say, that at least a temporary bottom is in? How can we confirm that at least a temporary top is in? So this is what this approach is all about. Again, this is a 10-minute chart because things are a bit easier to see here. Okay. Let's start with finding an area of support. So do you see this low that this bar makes? This big blue bar obviously has a low. The following bar makes a new low, right? The bar after that makes another new low. Notice that this bar that makes a new low does not take out the high of this big red bar. So it makes a new low. However, the following bar, the very next bar, does not make a new low. Instead, it immediately takes out the high. This is the bar I'm talking about. This is a bar that makes a new low without making a new high. The following bar does not make a new low and instead takes out the high of this bar right here, maybe by a couple of ticks above this pivot. This is the pivot break. That's why I call it the pivot break. Slightly above this high, here is the long trade. Right here is a place where you would take a long. Do you have to wait until the bar closes? So that's one of the things that could be up to an individual trader. The way I trade it, no. I simply takes intra bar. I will take a long when this pivot high is broken. Is it more conservative to wait for a bar to actually close above the high? I guess it is. Obviously, you'd be getting in a slightly higher price, right? But maybe you confirmed it better. Again, this part could be individual. So quickly again, we're looking for a low and a new low without the high taken out. This is for the long setup. Again, a low, a new low. The high is taken out by the following bar. The high is taken out by the following bar without making a new low first. This is the long. Okay. So now we have a move higher, we have higher high, higher high, higher high, another higher high. And now the following bar, the bar right after the bar that makes a new high. Never mind that it closed down. That part does not matter. The point is this bar makes a new high. And then the following bar takes out the low. Here is the short. Right here. Even though this bar still closes above the low, the way I trade it, I just simply have, let's say, a sell stop order right below this pivot, slightly below it, right? And as soon as price hits it, here is my short. Okay? So when you are looking for a short, when you are looking for a possible top occurring, at least a temporary top, you're looking for a high, a new high, a new high. Here is another new high, and then the low is broken, and here is the short. Same thing, right now we have a low, a new low without the high being taken out, a new low here without the high being taken out. But the following bar does not take out the low. Instead, it immediately takes out the high. Here is the long. So we have a temporary support area here, and then here is the long to go higher. This is the basics, and we will go over some more examples. I just want to point something out that I think is important, but again, it is up to an individual trader. In this case, this is an interesting case because you can see that here the low was taken out already. However, why didn't I say that this here is a short? Even though it would have worked out fine, but I don't focus on outcomes. The outcome is out of my control. I can only focus on the procedure, right? I can focus on what is happening. The reason this here is not a short, because this bar first takes out the high. If you can imagine, right, this is where the bar opens. It takes out the high first. The minute it takes out this high, the minute it takes out this high, right, this bar takes out this high over here, it immediately disqualifies this bar. The way I trade it, it immediately disqualifies this bar from taking a short. So even though, yes, later on this bar takes out the low of this over here, it is not a qualified short trade in my book, the way I trade it. Now, this bar, however, does not make a new high, and it immediately takes out the low of this bar, and this is a short. Nice and quick, just like that. Here, of course, there is no question. There is a new low, and the next bar takes out the high. Next, I'm going to try and find a place where something happens that might put things into question. So watch this now. All right, here is a situation that is interesting, right? So we have a number of new highs coming up. We have this new high, and then we have an equal low. So remember what I said, it's not just enough to hit the low of the bar that makes a new high, it needs to break it. So you want to be like whatever, in the case of a NASDAQ, maybe 4 or 5 ticks below, just to make sure. This is just an equal low right over here. And then we have another kind of inside bar. Finally, the third bar from this one breaks the low. Is this a qualified short? And that's something I've been over in my room, a lot of back and forth. The way I trade it, I want to see an immediate rejection. In this case, if I'm looking for a short, I want to see an immediate rejection of the high. I don't want to wait a few bars until finally it breaks. But this, again, where you decide what works for you. Looking back, of course, this would have been a successful short trade. But again, I don't want to focus on outcomes because outcomes are out of our control. I can show you plenty of cases where if a market waits like this, it will just spike the low by a little bit just to take out stops and then go up anyway. So I want to see an immediate rejection. If I start seeing inside bars, I am no longer interested in a short. Okay, so now we're gonna have like a pause the video moment to see if you guys kind of get it if you're brand new to this. So in this situation, let's say we have a high, we have a higher high, we have a higher high, we have a slightly lower high, and this bar takes out the low of this bar whose high holds. Right here, it takes out the low by about however many ticks, but it does break the low. Is this a qualified short? Pause the video, see if you can answer this question. Is this here a qualified short? The answer is yes, of course. Yes, it is a qualified short. It's a qualified short because the high was not broken. It's not even an equal high. You can see here the high here is 210 and this one is 209. So there is no new high. The low is broken and here is the short. Where is the stop? Where is the stop? Again, try to pause the video, ask yourself, if you're taking this short right over here upon the break of this low, where is the stop? Slightly above this pivot high. Not right on top of it, because the market could try and test it. Slightly above this high, which by the way, when you look to the left, you see this pivot over here anyway. So slightly above it, and you grab whatever you can out of this trade. Here is another example where the high is not taken out immediately, right? So in case of you're looking for a long, so you're seeing a bunch of new lows here. There is a new low here. The following bar does not take out the high. It's an inside bar, right? It does not take out the high. The one after that does take out the high. And the way I trade, I would not be taking this long because the high was not broken immediately by the following bar. Here is another example, however, where a long would work just fine. In my book, I would not be taking this long. However, plenty of traders do, and this would have been, of course, a successful long. So now we have new highs, new highs. Here is a bar that makes a new high. The following bar takes out the low, and this would be a short. Of course, this is a legitimate short. We don't have a new high. The low is broken, and here is a short that would take you down. Here is an example why it's important to put the stop slightly below. So we see these new lows coming down, right? Here is a bar that makes a new low. Its high is immediately taken out by the following bar. This is a legitimate long. Never mind the fact that it's lunchtime. I'm just showing an example. This is a legitimate long right over here because the high of this bar that makes this new low is immediately taken out. The stop, as I said, must be slightly below the pivot because here is a test of this pivot. If your stop was right on top, you would have been taken out for no reason. Again, if you look to the left, you see this pivot anyway, so you might want to be slightly below that. So this long eventually works out, but first the market makes a test of this pivot, and that's why it's important to keep the stops slightly below in the case of a long or slightly above in a case of a short. Then of course we're going higher. Same story repeats. Here is a new high. A bar makes a new high and its low is immediately taken out by the following bar. Here is a short. Now, what kind of targets? I mean, that's always the question. What kind of targets? It's impossible to answer without a context, right? What is the context in this story? Well, this is lunchtime. The market is pretty much directionless. And so your targets, I believe, must be pretty small, just kind of a scalping kind of deal. You know, if a market is within a 40-point range, it's asking a lot to try and get the full 40 points, right? So you try to adjust your targets according to what the market is doing. It is silly, in my opinion, to trade without having context of what is it that the market is doing. Never mind what we want, what is it that the market is willing to give. So that's very important to consider. Another question, which again would be answered individually, is in the case of a long, how many lower lows do I want to see? Difficult question to answer because again it depends on what the market is doing. What is the condition of the market? Well, if you take a look over here in this example, you see kind of a very directional move up. So we have this new high and the low is taken out here. Is this a legitimate short trade? I mean, the answer is yes. So the entry needs to be slightly below the pivot. So the entry would be somewhere like maybe 1150 to 1150, and the low is 96. So even though it doesn't look like much, it's definitely a decent amount for at least a scalp. But the question that now arises is, okay, so we have a low, we have a new low. So only one new low. If now there is, now we don't know this is going to happen. If now there is a long setup, in other words, if now the following bar, after making this low, if the following bar takes out the high without making a new low, is it a legitimate long? And I would say in this kind of a situation, even though there is only one new low, it is an aggressive, legitimate short. I mean, a legitimate long. Yes, it is aggressive because there is really not much of a retracement here. And you pretty much are buying into the high. That's what makes it aggressive. However, when you take a look at what's going on, you see that this market wants to keep on going higher. We just had a minor retracement, relatively speaking, and it will probably make new highs. So this bar that breaks the high, right? This bar breaks the high of this bar that makes a new low. It is a legitimate long. Yes, it is aggressive. You are buying into the high of this move. However, I would really have no hesitation of taking it because of in this situation, I see this as a very directional market. Always keep in mind, ask yourself, what is it that the market is doing? It's not all one size fits all. If this market was more range bound, just kind of going from support to resistance, I would not go long simply because one bar makes a new low over here. However, again, this is a very different situation. I would be looking for another opportunity to get long, and this here could be it. Where would my stop be? Slightly below this pivot, not on top, slightly below this pivot, and then of course up we go. Now, we have this bar that makes a new high. Its low is just barely taken out, but it is taken out. This is a legitimate short. Would I be taking this? Complete honesty, no, because again, this is a very strong market. However, that aside, this is a legitimate short. I would not be taking it, but it does give you a decent scalp from maybe like around 84 down to about 62. So this doesn't look like much, but it is 20 Nasdaq points. Here is a situation where I would avoid. So you see this kind of a low, new low. Now this bar does not make a new low, but does not take out the high. Does not take out the high. This is pretty much an equal low. The following bar does take out that high, and that's when it gets kind of, you know, we are still well aware that we are in a very bullish position here. There is a retracement. The bar here does not make a new low and does not take out the high. To be completely conservative, you would disqualify this. If you're slightly more aggressive, you could say, well, even though there is pretty much like a new low by a tick or two, we are in a bullish market, the high is taken out, and there is nothing wrong with this long. Again, I'm not sure how I would play it. Um, I would probably just let this go. However, again, completely objective, there is really nothing wrong with this long. Then of course we have a bar that makes a new high by a little bit, and its low is immediately taken out. Here is the short. Uh, Again, here we have a new low here. The following bar takes out the high. Here is the high. So, I mean, here is the long. So you guys are getting the idea. But you see, by the way, how here, this section of time here is very different than section of time here. Take a look at the move here, very directional. This is less so. So here is where I would be a lot more selective. I would not just take, for example, a long just because one bar makes a new low. Here I'm going to start being a lot more selective. For me, this is good. Here is a new low, the high is taken out. This to me is fine. Because we are kind of toward the low of this range anyway, and you can see how there's a pretty sharp rejection of the lower price. Something I did not really touch upon is the size of the wick. And the bigger the wick, the smaller the body, the bigger the wick, the more convincing this idea here that this is a rejection of lower prices, at least temporarily, right? We're looking to scalp. At least temporarily, this is a very sharp rejection of lower prices. Overall, we are still in a very strong uptrend, so I'm looking for longs. I prefer longs as opposed to shorts, and here is this long. So we have a whole bunch of new highs. We have a bar makes a new high. The low is taken out. Is this a legitimate short? The answer is yes. Again, given the trend we're in, I probably would not be taking it. But regardless, just purely rules based. Is this here a legitimate short? Now, looking at it closely, actually, I'm not sure. Let me tell you why, and maybe some of you can already answer why. Why isn't this here a legitimate short after a buy that makes a new high? Well, if you recall, I said it needs to break the pivot. And it looks like, does it break the pivot? So the low is 20, and this low is 19 and a quarter. As I said, Nasdaq at least 4 or 5 ticks. I mean, at the least, as far as to consider it as a pivot break. So probably very tough to call, but I would say probably not a legitimate short. It is the following bar that takes out the low. And as I said, I prefer a very immediate rejection, not to wait. But if in your approach to this you say there is nothing wrong with the bar after, let's say, the second or third bar even, and you would have to have it in your rules. Even if the second and third bar, in the case of a short, takes out the low, it's still legitimate for me. I like an immediate rejection. Here is an example of an immediate rejection, right? Bar makes a new low, the following bar takes out the high immediately, without making a new low, of course. Immediately takes out the high, and then up we go. If I'm still looking for long, now this is past 1 o'clock, a low, a new low, a new low, the high is taken out, and you could have gone from, let's say, maybe 59 up to like 68. So again, you have like 8 points, 9 points. Giving the time of day, it might be all you can get. You see the repetition. I don't want to keep repeating this, right? So a high, a new high, a new high, the low is taken out. Boom, here is a short. Anyway, so now that we have the basics of this approach, let's discuss how to best use this methodology because it is most profitable when used in conjunction with important levels. So let's look into that. So this approach works best as far as turning points if these turning points occur at important levels. Now, what are those levels? We have a Discord group where we share with our members key levels every day between 7 and 7:30 in the morning, about 2 hours before US session opens. I share some levels. Also, Markets with Gil shares his levels. Our levels are very close for the most part anyway. He also has a live room, by the way, if you don't know, which is doing great. But in any case, so here is from Friday. So I have the Friday chart on. Here is what I posted on Friday around 7 a.m. 160. You see the Nasdaq 160? Above 160 is bullish, which means what? Which means if there is a test of 160, do I know ahead of time there's going to be a test of 160? No, obviously I don't. I do know that as long as they're above 160, they are bullish, and very often a market would test these critical areas. So the first test after 7 o'clock comes at around like 8:45. Here is a low, right? So we have a whole bunch of new lows. Here is the low right into the level. The low here is 157. So the level is 160. The actual is 161, but I'm not going to, let's say 160. Here is a test of it. Look at what happens. The following bar takes out the high right here. The following bar takes out the high. Your entry would be slightly above this pivot high for a long. Your stop would be slightly below the pivot low, this bar's low, and up we go. How much would you target? Well, again, you got to keep in mind what kind of volatility we have. This is pre-US session, so Globex volatility is limited. So you got to keep it in mind when you go for targets. If you want to get 20 points, but the average true range is 8 points, you would have a problem. So either you took your profit here and you would have been done, or not if you were looking for more. Look what the market does, very common, right? It comes and retests this 160. This time the low is around 156. And again, look what happens. Low is around 156. The following bar takes out the high. The following bar, here is the test of 160 and a new low in this sequence. The following bar takes out the high. Here is your long. Where is your stop? Slightly below this pivot, which, by the way, if you look left, also coincides with this pivot because this 160 area, and it's never to the tick in the Nasdaq. The Nasdaq is too wild, to go to the tick. But this is the 160 area, which is important. You look to the left, there was a pivot here. Your stop must be slightly below. It never even tests it this time. It just goes straight up. So this is an example where the pivot break for the long side occurs at a very important levels. Those are the highest probability setups. Do they require patience? Yes, they do, because you just have to sit on your hands and wait for market to come to these levels. Do they always make it to these levels? No. However, very often they do, and when they do, it creates just a great high probability opportunity. And you could go for more than just a scalp, but again, keep in mind it's very possible, let's say, for this to happen, right? Looks like market is starting to go up from the 160 and then it comes back again. This time it did not come back, but we all understand, right? We can only say that after the fact. So if you have the stomach, and depends obviously on your prop firm with the trailing drawdown, all that stuff. Um, if you can try and hold, yes, because there are levels, as I share, above 160, there are all these levels you could target, and the market indeed went there. But holding a trade is not necessarily a very simple thing to do. So I would recommend, as I always recommend, just take your money and run. However, if you want to try and hold, yes, there are opportunities to the upside, which are much bigger in this case than just a scalp. Now, in the live room with Markets with Gil, I'm trying to remember the exact price. I don't recall the exact price. I think it was something like 227. I could be wrong, but it was somewhere between 220 and 230. That's where he called a short on the Nasdaq. So if we look here, what happens? Let's make this even bigger so we can really see what is happening. Here is a bar that reaches this area of a shorting opportunity that Markets with Gil called. However, you can see here the following bar, even though it does not make a new high, it does not take out the low, right? This low is not taken out by the following bar. So that would disqualify it from a short. The very next bar, even if you look now, does make a new high, which is an equal high. It's like a double top. It's an equal high to this, and it is a higher high than this. All of a sudden, once again, we have a qualified short setup, even though I must say it is more on the aggressive side. There is only one new high in this sequence from this bar, which is an equal high to the bar before. It gets a bit tricky. Yes, technically it's a legitimate short. It is more aggressive, but what would give me the confidence in this case is because Markets with Gil is already calling for a short at around 227. I think that's what it was. And so this short here, this bar, then breaks the low, right? We have a bar that makes a new high following this bar, an equal high to this, a double top, if you will, and then a short right here. Now, I don't know what's going to happen next. We see a retracement up. Where is my stop? Remember I said, where is my stop? It must be slightly above this pivot high, not right on top of it, because they could try and test it slightly higher. As it happens, there was no actual test of this high. They came close, but no actual test of this high, and the market indeed comes down from 227, or actually this short would have not been 227. This short would have been like here, right, slightly below the pivot. So at around 209, this where the short would have been at 209, and they make a low of like around 177. I don't think I mentioned it yet. It's kind of obvious, but I should mention this. The higher time frames, when these setups occur on higher time frames, it will result in higher probability than a shorter time frame. Let's say a 10-minute as opposed to 2-minute or 1-minute. The 10-minute pivot break would have a higher probability of success. However, the larger the time frame, everything is a trade-off, right? So while the larger time frame might give you a better setup, the risk is much greater. Why do I say that? Because in points, a 10-minute bar would have more points than a 2-minute bar, right? So if I'm taking this short, let's say here, when this pivot breaks, let's say my short is at like 209, let's say 209, 210, whatever, and the high is 232. So I have like 20 semi-points of risk. However, a 10-minute bar might have a lot more than 20 points of risk. If I did this on a 1 minute bar, I probably would have had less risk than 20 points. So the smaller the time frame, the smaller the risk in points. However, also the lower the time frame, the probability of success is slightly lower. Um, just something to keep in mind. Try to have, if you want to try this out, try to have a few charts, maybe like a 1 minute, maybe a 3 minute, 5 minute, 10 minute, whatever. Try to have more than just one chart and see what works best for you. What are you most comfortable with? As far as if you're trading off of the levels that myself and Markets with Gil provide, I would say a smaller time frame is better, simply because these levels are very precise and you don't need a whole bunch of confirmation through a larger time frame to be successful. Also, the larger time frame, by the time the bar closes and then breaks, let's say, you just might be way away from the original, in this case, let's say short level of 227. As it is, by the time we got in, it was like 209 or 210, so it's already like 17, 18 points away from the ideal shorting area, and this is a 2 minute chart. So if it was a 10-minute chart, I mean, who knows where the final short trade would have happened. Maybe even a 1 minute would be better in a case like this. But again, have a few charts in front of you so you can judge. Okay, so this is really it. Again, I call this the pivot break approach. That's just the name I gave it. I did not come up with it. It's been around since forever. If something is not clear, if you have any questions, please leave them in the comments, and I will be notified and I will answer them. Come to visit our Discord group if you're not a member yet. We do some amazing things in this group. We have a signal performance guarantee in the live room, meaning that for any period of 30 days, overall the signals will at least pay for the membership, or you can request a refund of the subscription price. So far, Markets with Gil is doing amazing in this room, so just come and see for yourself. Thank you all. See you next time.